You're at the checkout. Your phone buzzes with a notification. This month's credit card statement is ready. Your current balance is $5,000. It's a number that might make your heart rate spike just a little. But right below that intimidating $5,000 is a smaller, often reassuringly highlighted line. Minimum payment due, $35. You breathe a sigh of relief. $35 is easy. You hit pay, feeling you've met your financial responsibility. You think you've kept your credit score safe, but that minimum payment button wasn't created to save you. It is one of the most effective financial designs ever created, built to keep you in debt forever. For millions of Americans today, the minimum payment is no longer a choice. It's a pure survival strategy. According to the Federal Reserve, total credit card debt in the U.S. has surpassed a record $1.14 trillion. As inflation pushes up the cost of rent and groceries, credit cards bridge the gap for essential expenses. People swipe to buy food, and when the month ends, paying $30-something provides an illusion of control. We feel we're managing cash flow well, but there is a counterintuitive truth in the credit card industry. Customers who pay off their balance in full every month are colloquially referred to as deadbeats by banks. They don't generate profit. The ideal customers, bringing massive revenue, consistently pay exactly the minimum amount every month. To understand why, look at the core mathematical mechanism operating beneath your everyday mobile banking app right now. The minimum payment is not calculated based on how long it will take you to get out of debt. It is calculated using a specific formula: all accrued interest plus exactly 1% of your principal balance. Take the current average interest rate recorded by the Federal Reserve, which sits at around 21% today. When you owe $5,000 and the bank asks for the minimum, most money goes into their interest revenue. Only a tiny fraction is actually used to chip away at that original $5,000 principal balance. This mechanism creates a psychological phenomenon known as the illusion of progress. You see the balance drop slightly. Your credit score remains safe, but the principal is almost completely intact. Next month, the entire process repeats. The bank continues charging 21% interest on that massive principal. Interest simply continues to generate more interest. You are like someone desperately trying to bail water out of a sinking boat using only a teaspoon. Real numbers reveal the power of this mechanism, based on the Consumer Financial Protection Bureau's official debt calculator. If you owe $5,000 at 21% and pay exactly the minimum, you won't escape in 5 years. It will actually take you more than 23 years, about 277 months, to pay it off completely. During that quarter century, you will hand over to the banking system more than $8,000 in interest alone. That initial $5,000 debt now has a total cost of over $13,000. That is the hidden math. So why do we keep doing it? Why don't we pay $100 or $200 if we can? Behavioral economists call this the anchoring effect. Seeing a bold number, your nervous system uses it as benchmark. Instead of asking how much to tighten your belt, your brain accepts the number the bank already suggested. Studies show if financial apps removed the minimum payment line, consumers would automatically pay much larger monthly amounts. The 2009 Card Act requires warnings about payoff times if only the minimum is paid on paper statements. But on mobile screens, those warnings are pushed into sub-menus, making way for a clear minimum payment button. Every single year, credit card issuers rake in hundreds of billions of dollars in pure interest revenue profits. That massive profit is built entirely on the minimum payments of millions of hardworking people around the country. Paying the minimum isn't a budgeting tool. It's a sophisticated mechanism letting you rent your debt each month. Next time that notification pops up, Remember, the minimum number is not an absolute obligation you must fulfill. It is simply the cheapest fee for the financial system to safely keep you trapped in their loop. So, are you paying to free yourself, or paying to maintain profits for a system you never escape?